Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Friday, September 11, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today, folks, on the markets, we actually have markets that are showing some weakness today, but finally we had a surge after the beginning, well, not after, well, during, following 11:30 on the indices. But so far, it really remains a market that continues to be really volatile. However, this neutral range where we are stuck and where we have been stuck since the beginning of this week still persists on the Nasdaq, on the Dow Jones, on the SPY, and as well as the TSX. But the TSX, compared to its American indices, is actually lagging, and this is because we have a lot of weakness on the energy sector. We're going to talk a lot about it because there's some stocks that are in a bearish signal. Last week, I made a chronicle on the energy sector where there were some opportunities to short. Not sorry, last week. This week, I made a chronicle on the energy sector saying there were some opportunities to short. Some of them, we're in a situation where you could take some profit, and some of them not yet. But definitely, we're going to focus a lot of our attention on the energy sector today. And also, we have the gold sector, which showed some weakness, but finally is rebounding, but still unable to reverse its downward trend. We published an article today on our Facebook page explaining why we have such volatility. And the thing is that one of the explanation coming out of a portfolio manager, I think, is that he says a lot of funds are either deleveraging, so which means that stocks that have rallied for a while, they're selling them, which creates some selling pressure, and they're covering their shorts by buying back some positions. So this is why we actually have those slight rebound or those slight rallies that are not as strong to allow the markets to make a new high. I think investors or funds are doing that simply because they don't want to have to be too exposed on the market, especially ahead of the FOMC announcement next week on Wednesday, where the Fed will take their decision concerning if they're going to raise interest rates or not. So definitely, I think investors are playing safely or being cautious, and I think this is something that we have advised to do on MarketGurus.tv by recommending half positions, and this is something I think that also you should do as well even if you're opening some short positions or some long positions among some bearish ETF. So let's take a look here at the energy sector. This is where I want to focus my attention on today. Oil testing its support but unable to make a new low. Today, Goldman Sachs said that they expect oil prices to be around $20 because they say that the excess of supply on the oil sector, they don't expect it to stop in 2016. They expect it will persist in 2016. So this is what they say, that if OPEC members continue to keep their same rate of production, well, then eventually oil is going to go down to $20. So, of course, Goldman Sachs statements matter on the market. They're a big player on the markets. Now, if we take a look at the energy sector here, we have a clear bearish cycle that persists. We have published today on marketgurus.tv a list of the most of the breakdowns in the energy sector, but we have put the most active, I would say. I'm not going to show you all of this, but I'm going to show you some stocks that were out of the list. If you want access to the full list, you can make the free trial of marketgurus.tv. So here's some of the stocks, and we're going to talk about some strategies. First, in the oil and equipment sector, there are some stocks in the US, also some stocks in the Canadian side, but there's Baker Hughes. Clear breakdown there. The thing on that stock, what I'd like to see a new low intraday. It's good that we made this first low, but I'd like to see the stock going below 52.26. Thank you. To confirm the strength of the breakdown, and then I will be comfortable to short it around 52.26. CGNS, a clear breakdown too as well, but the thing with CGNS is that, well, we could, I don't know if we have, well, forget it, it's $3, so it's not a stock that I would short. Calfar Coal Services, same thing for Baker Hughes. Intraday wise, we need the stock to actually make a new low. But the thing is that the stock is already losing 6.10%. It's actually seems to confirm that there's some buyers who are coming in, so I don't really believe in that short positions though on Calfar Coal Services. So first, you have to take into account the intraday chart in those graphs and also see if ever the stock's not losing as much. One stock that could be interesting is a stock like Canadian Natural Resources. Clear breakdown, not losing as much, only 4.13%. Stochastics, okay, close to the oversold situation, which is not so good, but to reach this bottom 1912, we don't have 10%, so that won't fit in our criteria to be put among our analyst choice. We have a stock like Range Resources. If it goes below $35, it has to be watched. That could be a new breakdown. Chevron, actually it broke down yesterday, so forget about it. Suncor today, it's breaking down, but don't forget that Suncor, the CEO said that they have a lot of cash and they were about to be in a buying spree if some opportunities came along. So on today's breakdown on Suncor, don't expect to make a lot of money because you know that at $33, it's a point where several investors will step in to get into Suncor. So this breakdown, I mostly consider it as an opportunity to buy Suncor at a cheaper price whenever it reaches the low of this downward corridor. So that's my target, that's my strategy on Suncor. ARC Resources, pretty nice breakdown, not losing as much. Intraday wise, the stock is continuing to make a new low, which is a good thing. Also Stochastics here, close to the oversold situation. So this is the thing I don't like. But overall, it's one of the best breakdown today. So there's ARC Resources, Enerplus as well is one of my favorite, and Baker Hughes on a new low intraday. Those will be the best picks so far. No, sorry, let's forget Canadian Natural Resources and Baker Hughes and Calfar Coal Services. That's if ever they make a new low intraday. So this is some of the stocks among the list that is published on marketgurus.tv. We also have some weakness on gold. If you take a look at this, but the gold sector here made an attempt to break down its support. Finally, is starting to get back up. So this is why day trading, we recommended day trading on the bearish ETF, such as GDXT or HGD. But if you take a look at those charts, though, it has been really a clear disappointment. What we said on marketgurus.tv is that you should have wait to see those bearish ETF get out of this important upward corridor. So for HGD, I wanted the stock to go above 1855. We made a first attempt, but we didn't have a second uptick. So that was a false signal there on HGD. and the stock is got the ETF got back within its upward corridor. Now I think it's kind of tough to determine what's going to happen on the gold sector. Target becomes 1914. If ever we could have, let's say, a stabilization phase and a clear wave of buyers, but so far we're seeing more sellers on a stock like that because the stochastics is not yet going up towards the overbought situation on HGD. So it remains a market that is volatile, where the intraday movement are short-lived and not enough to actually allow us to make a lot of money on day trading. So it remains a market that is really tough. Now, if we take a look at some of our analyst choice, as I said, there are some stocks in the energy sector that I've talked about on the YouTube Chronicle that I made on Wednesday that we recommended as a short. Actually, Secure Energy Services was a stock that was recommended in our analyst choice portfolio on Wednesday. I've shared that with you if you followed our YouTube Chronicle. Today, we're in a clear situation where we're monitoring that stock to potentially take some profit. Will we consider to open new positions in our analyst choice portfolio and market gurus today with the weakness of the energy sector? So far, I kind of doubt that, because I think that mostly what we're going to be focused on is to actually try to take some profits in the positions we already have, such as Secure Energy Services that you can see here on the graph, with a stock that is losing almost 7.78%. We're trying to take some profit in those positions before recommending new ones. So that's our strategy, though, because we still have markets that remain neutral, and so far we don't want to rush in and actually overly increase our short exposure or long exposure as long as markets stay neutral. So it's all about being cautious as well, just like institutional investors are doing with their fund. Now, SDRL, Lynn had a question yesterday I didn't have time to answer, so let's answer that. SDRL, is it good to buy soon? So SDRL, no, Lynn, it's a stock that continues to maintain its decline. I agree it's a stock that can be really active, but right now we are within a clear downward corridor that could even bring the stock even lower. We still have we still have an oversold situation that is closed there, but so far no. SDRL, a buy only if it can get out of this downward corridor. If it can go at least, if it stabilizes there, the entry point becomes around $7. But if it doesn't, if it goes lower, well, then you need to see when can the stock at least retest and even reverse this downward trend on Seadrill. Now, so it's not a buy. Now the DGI, you bought DGI. DGI at 11 cents. Is it a good deal? Well, I cannot give an opinion right now on DGI because the stock has not traded much today. We're staying stable on the intraday chart, just like the daily chart is showing. So would you buy a stock like that right now? Let's just put the volume and balance to give us some clue on what's happening with the volume. Are we seeing more buyers there? So let's put, for instance, the volume and balance on that stock. Okay, see, even the volume here I've been stabilizing. So for me, getting it into a stock when the volume and balance is flat, when the stock is flat, when it's not trading as much, I don't consider it as a good deal, Michelle. So for me, that stock, should be put more on your watch list. Let it stabilize more, possibly higher than 1150, right? Because we will get out of an important upward corridor. So that will be a goal on a stock like that. But right now, I think we're more due for stabilization phase on a stock like Dajin Resources. What define a dead cat bounce? I don't know what you mean by dead cat bounce. You mean a false rebound? Yes. Yes? Well, a false rebound, what defines it? Well, for instance, for me, what defines a strong rebound, let's take a look, let's answer this question like this, is if a rebound can actually lead the sector or the stock to reverse an important downward trend. So as long as we have a rebound that doesn't allow the sector to reverse its downward trend, for me, it's not a rebound we can continue to believe in. However, there's still a risk that this rebound could be higher on the gold sector, and that the gold sector could go back higher than its bottom of July. But the thing is, intraday wise, I'm still seeing the sector where this downward trend has not been reversed. So for me, that will classify today's rebound on the gold sector as a false rebound. So that will be my definition here of a dead cat bounce. Now I want to close the show here with showing you what is their day trade of the day. It's that stock has been a VMEM, and you see what I said though, you had to be quick to take some profits. You had 1, 2, 3 entry points and quickly had to take some profits. Even if you're making a 3, 4, 5%, you had to take some profit on a stock like VMEM. We saw a wave of sellers that came out that bring the stock at around 168. Now the new entry point is going to be around 170 on a stock like VMEM, but this has been our best day trade of the day. Next week is going to be really busy. We're gonna have the retail sales, manufacturing data of New York, Philadelphia Fed survey, and of course we're going to have also the decision of the Fed concerning what's going to happen with their rate hike or so. So this is something that we will be definitely monitoring pretty closely next week. So folks, I wish you all a good trading. Today I think, yes, we have a lot of weakness in the energy sector, but if you have opened some positions already on the energy sector, I think you should hold on to those bearish positions. If you want to open new short positions today, favor first stocks that are making new low in their intraday chart, at least give you some potential. Take a look at the 933 stochastic, see if you have some potential before we reach the oversold situation, and also take a look to see if the stock is not losing as much, because if ever we have a rebound in the next few days, well then at least shorting a stock that is not losing as much will make your loss potential less than if you're shorting a stock that is already losing 10 or 15%. So I wish you all a good trading and see you next week on the Swing Trading Show.